Kaylee Lyons, thank you. Jim Bianco of Bianco Research holding those calling for hearings partly responsible for the GameStop frenzy. Writing the following: the actions by the Federal Reserve and government during the early days of the pandemic crisis that not only supported financial markets but made everyone forget that investing does carry potential risks. Jim joins us now for more. Jim, tell me more. Who's forgotten those risks? Is it the new entrants, the retail, or is it institutional investors on the short side?
Yeah, see, I think it's the institutional investors. I think the story here is that the institutional investors forgot about risk. There was probably some collusion among them that allowed 140% short. They all ran into these types of trades thinking that there was not any risk. No one was going to notice that 60 million shares were short on a 50 million share float or do anything about it until we found retail investors. Retail investors are not the problem. They're the people that identified the problem and in pure capitalism took advantage of it. The fundamental here was that giant short in the short squeeze. Now it's deflating, and it looks like the buyer at $400 last Friday was a short cover. It wasn't a lot of small retail investors that were just chasing this thing to the moon. So I think when we look at this story, we're going to have to say, what was the circumstances that left these institutional investors so vulnerable? Why were they vulnerable? That only retail could figure out.
So, Jim, let's add to that, and I'm sure you'll agree. Let's leave the collusion and the manipulation to the regulators and let the lawyers deal with all of that stuff, and they can continue with investigation once it begins. But on the Reddit revolution, the phenomenon that I appreciate has been going on for a long, long time, beyond what's happened in the last couple of weeks, this added discipline that we keep going back to, you and I, when we talk about it. Talk to me about the added discipline that it's injected into this market in the last couple of weeks.
Yeah, see, I think, it's changing the rules that Wall Street is working by. The Reddit revolution is not new. I mean, Bloomberg Business Week had a cover story about this exact story almost a year ago, written by Luke Kawa. Remember him?
Who's that?
Yeah, exactly. It was very prescient at the time. And the story went on to say you can't ignore 900,000 people on Reddit's Wall Street Bets. There's 8.3 million people on it today. And right after the story was written, we had a 35% correction in the stock market. Didn't shake them out. What they're doing is they're identifying practices on Wall Street, not illegal practices, but practices on Wall Street, and they're taking advantage of it. They bought the non-technology stocks that no fundamental manager would touch because they thought they were overvalued. They bought Tesla. They chased into the airlines after Buffett got out. They won, and now the trader aspects of it identified shorts. Wall Street's going to have to change its practices now, not only for short selling, but only sticking to, accepted index level kind of stocks, thinking broader about, thinking like Cathie Wood, if you want to think about it in those terms, about technology stocks and the like. There's going to be a revolution. And it's going to occur, I think, at the institutional level because we got this new player. It's already been through a bear market last year. Yeah. It's going to force a change in the rules.
Jim, I think you and I are on the same page about this. The one thing I'd throw in there, though, is that aside from all of this, you do have this immense stupidity where celebrities who have got nothing to do with this story whatsoever are using this to make some sort of moral judgment about what has happened in the last couple of weeks and coming out with some stupid lines like, hold the line. Hold the line. Jim, have you been frustrated with that it's almost clouded the real story, I think, for market participants that's gone on?
Yeah, I get frustrated by that because I think that what people do is they take this story and they fit whatever agenda that they want to fit onto it, whether it's the celebrities that you're talking about or it's politicians or it's Wall Street itself that seems to want to talk about it. They all want to fit their own narratives onto this story. And they don't want to, I think, see what's really happening or recognize this didn't start 2 weeks ago. Yeah. I'll reiterate, a year ago, Business Week had a cover story about it. And so it's been around for a long time. It's just we've ignored it until it became impossible to ignore.
It's confirmation bias on steroids for a lot of politicians, though, Jim, and for the regulator as well. What do you expect is going to happen? Not what do you think should happen down in D.C. What do you expect to happen down in D.C. after all of this?
Yeah, I'm afraid that what they're going to do is they're going to think that the answer is going to be to look at these message boards, look at Reddit, look at StockTwits or Seeking Alpha or Twitter, and they're going to say that there needs to be regulation on that end of it. And they're not going to look at how do institutional investors behave and do they leave themselves vulnerable to this new group. That short should have never existed in the first place, and regulators have to take a look at how that happened. That's where they should start, but I'm afraid they're not going to. They're going to start looking in the other direction.
Jim, it's always great to catch up, and I appreciate the ongoing dialogue, so let's keep it up. Jim Bianco there of Bianco Research. Coming